You've been told for years that the smartest thing you can do is pay off your mortgage before retirement. But here's the real question. Is wiping out that debt actually the best move for your retirement? Let's take a look. A lot of retirees see their mortgage as a weight they need to get rid of before retirement. The logic makes sense. Fewer bills, less stress, more cash flow. But here's the catch. Paying off your mortgage means you're tying up a big chunk of cash in a non-liquid asset. That money could be earning, compounding, or giving you some additional flexibility in retirement. So here's 3 questions you should ask yourself before making this decision. 1, what will it do to my cash flow? A mortgage payoff might reduce your monthly expenses, but if it leaves you house rich and cash poor, you may end up selling investments at the wrong time to cover your cash flow needs. Question 2, what's my tax picture look like? Now, mortgage interest deductions aren't what they used to be, but it still doesn't mean that it can't be helpful, especially if you itemize your deductions for your taxes. Retirement planning isn't just about debt, it's about your after-tax income. Question 3, what is my flexibility worth? Once you write that big check, that cash is gone. And getting money out of your house is much more difficult than liquidating assets to pay bills. You'd have to ultimately borrow again to get money out of your house, or simply sometimes selling investments for that extra flexibility can be beneficial. So again, instead of asking, should I pay off my mortgage? Try asking, does it make sense for me? And does it make my retirement stronger? Or does it make my retirement just simpler? For some, eliminating the debt is just a peace of mind, and it's ultimately a mindset. But for others, keeping the cash in reserves or having that additional liquidity can mean the difference between successful retirement and not a successful retirement. So here's what you can do. You can write down your monthly mortgage payment and ultimately see what that would do for your cash flow versus the chunk of money that you would need to pay the debt off. Seeing it side by side sometimes can just be very obvious in what is more important, especially in a scenario where you might have, say, a lower monthly payment, but it might take 6 figures to pay off your mortgage. Seeing it side by side can really help open your mind to what paying off the mortgage would actually look like. And remember, retirement isn't about doing what everyone else does. You see it all the time. I have to pay off my mortgage, or the minute I could, I paid off my mortgage with a big chunk of money. It's about decisions that fit your life, your goals. If you found this helpful, please subscribe and follow along, and we'll see you next time.